All right. Let's see. Do that one or that one. We're talking about markets today, so that's probably a good one. Okay. Scorpion, what's up? White Bishop. Houday. Bam. Joe Fernandez. ¿Qué onda? Krabby. Ella Paul. LAGO. Tim. Breakfast Leadership. What's up? All right. So we're just kind of getting started. We will do a very chill show. I'll try not to make fun of people for being stupid. The problem is so many people are so stupid. It's tough. You can't ask me to do that. You can't ask me to do both things. You can't ask me to not curse and not call people out for being stupid. That's not even fair. It's too much. No one human can do that. Tim, what's up? Other Tim, two Tims. There's no Tim better than any other Tim. Both of our Tims are on equal stature. Amy, Grace, Crypto Amigos. Yeah, I actually called out Cardano for being. Cardano's not done so well lately. They've had a series. Technically, they've been great. They've been hitting their milestones. Technology's been great. But what a huge letdown in performance. And I mean, it's just been one awful thing after the next in their little ecosystem. The NFTs are terrible. The DeFi stuff is terrible. Terrible. The dApps, ain't nothing no one's using. No one's using any dApp on, man, even the shills, even the rubes that are pro Cardano are not using a single Cardano app. Think about one that you use other than Daedalus, and that was built by IOHK. We have to be honest about even the things that we like. Jungle, good to see you, man. You know, even the things that we like, we have to be critical. If you're an investor, you're critical of everything, and you're critical of your own decision-making. You have to be, because if you're not, then you're not an investor, then you're a gambler. Even the things you like, you have to be honest about them. You need to look in the mirror. You got to do a little self-inventory, whatever you want to call it. I'm actually redoing the book I had written a while back. We used to go through it. 25 cognitive biases as it relates to the cryptocurrency markets. So I'm getting this thing cleaned up, and then I'll get everybody get a copy for free. I don't care. Because it's important to look at these biases we have in our thinking. And, you know, cognitive bias is all about statistical deviations in rational thought. What are the deviations I'm making from what a rational, non-emotional, objective human would think or do? We need to be like that. It's very difficult when you put money into anything. You become emotionally invested. That's very dangerous. Tim, JJ, what up, JJ? JJ was one of the originals. Yo, Nick, Sim Kitty, I know. You know what? I'm sure Vladimir's got a whole flock of those. The links, I think, are very popular in the cold climates. If anybody has any lynx knowledge, let me know. But I think the lynx cats are typically in cold, like you see them hunting in the snow and stuff like that. My cat is not big enough to hunt in the snow. The other cat is. We have two. I have one. I have the girl. She's little. Well, little's relative. Not little to a house cat, but little to a serval. And then my buddy Phil and Carol, they have the big one, he's less serval and more lynx, and he's big. He was at one time before we put him on a diet, because cats have to go on diets. He was closing in on 30 pounds. And it's not, anyway, 30 pounds. Gordon Bennett, CC Brown, White Bishop, SL Hines, what's going on? Michael, Nico, Jungle in the house. If you guys don't listen to Jungle Inc., you guys are silly. You should be listening to Jerry. You should be listening to Jungle. Matter of fact, back in the day when I was kind of looking for places to get information about XRP, because as many of you know, that was my first big win, like lots. Everybody that was early XRP, I don't care what the price is now. If it goes down to 20 cents, we all still did good. Because if you were early XRP, you were beneath a penny. So we all did good. And then we all watched the run up in 2017, and we were all really wealthy for a few days. And then Blitzkrieg. Or no, it's not a Blitzkrieg. It was depth charge. It was a depth charge. Oh, what a kick. But you saw in that little run how fast. Matter of fact, I was at the soccer field. I was playing soccer. When I got done with the game, I was rich. Like a week later, I was not so rich. And a week later, not very rich. Part of that was scammy behavior on the part of CoinMarketCap, no longer factoring in the South Korean exchange volume, which was very sketchy. And I'm sure if you look back at that, there was some very garbage behavior in and around that. You can't just discount exchanges that are doing, 300% the volume of the US markets just because you don't like what that does, because you don't like the project. Like if you run an exchange, you have to be ambivalent. You can't pick winners and losers. This is what we get. If you look at the news right now, Cointelegraph Pro, a lot of the news, BlockFi, a lot of these, they're very, very obviously pro certain things. They're pro Solana, they're pro FTX. Every third article is about these two things. They get really quiet though when like Solana shuts down for the weekend. It's done it a half dozen times. When it shuts down for a couple of days, they're very quiet. There's no articles about that. Maybe one random, but they'll all talk about all this VC stuff going on. Oh my God, you would think that that's the only project, that all the other protocols should just give up. But anyway, I used to listen to Jungle early XRP days, and he has this kind of cool way that he talks. And if you guys haven't heard him, he's much more motivational than me. Matter of fact, I'm the opposite. I make people depressed. But he's much more motivational. Now, Jerry's right in the middle. Jerry is like the sober yin to our drunken yang. You got Jungle on one side. He'll make you feel happy. Got Nick over here. He will make you feel sad. He will make you question whether you should be just investing anything or just putting it under your mattress. Then you got Jerry in the middle. Jerry is like sobering. Now, if you want to go down the rabbit hole, you got to listen to Emil and Jeff. And that's pretty much it. There is not a lot of other places to go to get any kind of good, really macro info. I urge everyone, on a side note, MIT, they have put a lot of their courses on macro and microeconomics, game theory, economic game theory. They have put a lot of these courses online, and you can audit the classes like I'm doing. So what I do is I audit. Every day I do at least two lectures from MIT. I'm going to MIT for free, bro. Now, what's funny about that is my roommate is actually a professor at MIT in the, organic chemistry, stem cells, all this kind of stuff. He runs the Whitehead Institute, but for genetics research. And they're doing all sorts of cool stuff. But I get to audit for free. He had to pay probably 60, 70K a year to go to school there, then get his PhD, then get me. I get to listen on YouTube for free. So take advantage of that. If you think about what your inputs are throughout the day, take advantage of that. Don't be listening to crypto YouTubers when you can be going to school at effing MIT for free, bro. Well, that's not free. I guess there's some, marginal cost for your cell service. All right. Justin Spain, Espanol, what's up? Expat, Matt, Jerry, formerly mentioned Jerry, the aforementioned. We were chatting a little bit today, Jerry and I were, about the Cosmos ecosystem, which I'm growing more and more bullish. I'm growing more and more bullish on Cosmos. Why? Because the transactions are awesome and cheap and free almost. It's like, man, if you use something and it's so elegant, you see the value. Oh, I wish I could see that. I wish right now I could see. We're going to go through these assets. I'm going to give you my 20-second thoughts on each one of them. And I'm all about protocols. Askus, what's up? Trofimov, what's up? Cosmic Michael, what's going on? All right, expat Matt. Links were reestablished in Colorado about 15, 20 years ago. They live and breed in the wild now. That's badass. So my cat is she's a F5 links, an F1 serval. So she's the mama is a pure serval. So she's the first baby of the serval, and she's a serval, like a pure serval. I don't even know how they did this without these cats killing each other. She's a serval, and the boy is a solid white F5 lynx, big. Both of the parents were over 40 pounds. So I got lucky. I have the little runt. It was a twin of this other one. And she's so great, but she rips everything. If you don't listen, friends don't let friends have servals. If you have anything nice, that stuff's gone. You chalk it up. It's gone. Everything's gone. Anything nice, it's all gone. Tube that pipeline. What's up? Ella Paul, Biotech Breakout. Jungle and the Heezy. Frank. Mike, what's going on? Yeah, Jungle's great. Everybody should be listening to Jungle. Everybody should be listening to Jerry, and everybody should be listening to Making Sense with Emil Kalinowski and Jeffrey Snyder. You really need to know, if you don't understand the inner workings and how the Fed really works and how it doesn't work and what is and isn't a central bank and what isn't money and what inert bank reserves are and things like that. You have to understand that. Everybody that has $4 invested, not just in crypto, but in anything, you have to understand that. If you don't understand what bank reserves are and what that system really looks like and why the Eurodollar system spawned out of that and why crypto seems to have spawned out of that, these kind of squeezes for liquidity, you just won't get it. But on the other side of it, and you need to go back, by the way, if you go and listen to Jeff and Emil, go to zero. Go all the way back to the very first videos. You need to start at the beginning. This is not going to make sense. You can't jump in. If you jump in right now, you're going to be drowning. Maybe what you do is you watch one current video and then go back and watch one of their early videos and slowly catch yourself back up, because you need to understand how the Fed really works. And you need to understand how yield curves work and what inversions are and what inversions in the Eurodollar curve mean compared to inversions and what interest rate swaps are and things like this, because you won't trade off of this information, but you'll understand what the foundation of currency units is. When you understand that, things start to make a lot more sense. And then what you think is guesses, your guesses are much more accurate because you at least know how the system is wired up, right? You need to know how the system is wired up. Dubai money in the house, crypto for life. Expat Matt. Let's see. Just latest video about how the FOMC is nothing more. It's and it's always been theater. You know, they do and hope people buy into the Fed myth, that portfolio effect. Oh, the Fed's going to do something, so I got to do something. And the Fed hopes that because people believe the Fed does stuff, that they'll go and act and essentially do the bidding of the Fed. It's expectation policy. There's no actual money in monetary policy, funny enough. No money moves. Monetary policy is not about money. It's about the expectations of what monetary policy might do and hoping that the stock market's pretty stupid, if we're being honest. So there is some portfolio effect there, but that's becoming less and less. And the bond market is where you go. You want to call a spade. You go to the bond market and you see, well, what do they think? Oh, the Fed's going to tighten. Therefore, and they're going to raise rates. Near term's going to go up. And then you look at and you should see a big curved yield curve. It's not called a yield flat. It's called a yield curve. And when that curve flattens and flattens and flattens, that's because the later maturities, you have bills, notes, bonds, right? As you go along the curve, those different maturities. Well, as you go further out, if it's flatter, which is basically inflation and growth expectations over time, the bond market, the people that actually deal with the inputs and outputs of real money, they can look at the Fed and call their bluff. And they say, yeah, you can do whatever you want with the short-term part of the curve, because that's where idiots play. But real money moving in and out of the pristine collateral market, that deals with actual inputs of cash, not promises, inert bank reserves, and other bullcrap, but actual money units. They call their bluff all the time. The Fed has never once called it right. And I say that sounds like, oh, that's a little bit too much overstating. No, I'm not overstating. The Fed has never once called it right. Go back all the way to the beginning. The Fed used to be not a joke, but almost a joke. The Treasury was like, oh, that's cute, you guys, stop it. And the Fed kept trying to get their autonomy. Like, we're going to do this. And the Treasury Department was, stop, you guys stop. Like a little kid at a birthday party running around with his pants down. You're like, somebody get his parents to get him out of here, this little weirdo. That was the Fed. It's still the Fed, only they've perpetuated this myth. And everybody thinks, oh, the printing money. The Fed has never printed money, bro. They don't print money. They print inert coupons that sit on a balance sheet digitally that do nothing, because guess what? Once the bank has those inert bank reserves, they have to monetize them. Otherwise, it's dormant. So they're trading what some people would call quality collateral, treasuries, bill notes, bonds. They're trading them because they don't really have a choice to the Fed for bank reserves, but they can't do anything with bank reserves. So the only way they can monetize is by trading them to somebody else. But what they're not doing is lending into society. So if you reverse any of this stuff, if you can unwind all of this crap by just reversing, what the Fed does is they look for ways to explain what happened so they can try to take credit for it. Ergonomic regression, econometric models regressed, right? And that's not really the way to do it, because you start looking at things that are correlated and you think that they are causal, right? Don't swap causation for correlation. They're not interchangeable, right? They're not distinctions without a difference. So anyway, Simon from England, what up, man? Selling my third of my DOT for AGIX. Well, no, you wouldn't sell DOT for AGIX. That'd be a gamble. If you were going to sell DOT, it would be because you were going to sell DOT to reposition yourself, rebalance your protocol layer assets. Keep these things bunched up where they belong. AGIX is a play. It's a gamble. Now, I believe it's a safe gamble, but it's absolutely a gamble in the AI space. And I think it's the best team. That doesn't mean a whole lot. I think Cardano is the best team. That doesn't mean a whole lot. I think Ripple, the company, is probably the biggest team in finance as far as crypto finance, right? Doesn't mean a lot. They basically S the bed. So you can have the biggest or the best, and they can just underperform. So if you were gonna rebalance, you would say, okay, of my protocol layer exposure, meaning what goes with DOT? Well, who are the common assets, the industry similars? Ethereum, Cardano, Near, Algorand. Yes, Algorand is on the list, even though they have terrible marketing. I was texting their marketing guy yesterday because I know him. And I said, hey, you guys are going to do some marketing? And he was like, hey, man, what's up? I said, are you guys going to ever talk to anybody? And just nothing. 3 texts in a row, nothing. I felt like I was trying to ask a girl out I met on Luxy or something. It was ridiculous. Anyway, nothing there. But so you would want to be rebalancing among your other protocol, your layer ones. Don't go from a layer 1 to somewhere else. That money's probably better allocated in layer 1 exposure. Michael, got to bounce. Trying to catch replay. Yeah. Well, I hope you guys do something to celebrate all the fun times you had when she was around. I'm sure dumps. Yeah, that's life, right? God. Plu, Scorbzion, JR, what's going on? Would you sell ADA for Adam since you're losing faith in Cardano? No, because I'm not losing faith in Cardano. The team, IOG, I'm not losing faith in Cardano. I think that the network of apps and all this kind of stuff is just junk. Their NFT ecosystem has been junk since the beginning. It's just a bunch of spammy crap. No different than the spammy crap you'll find on Solana, and most of the spammy crap you'll find on Algorand. I'm sorry, not Algorand. Algorand's barely getting into NFTs. The spammy crap you'll find on Matic, the Polygon NFTs are kind of like, bleh. So right now, Ethereum owns the NFT market. That has not changed, and I'm not sure that's going to change anytime soon. But these things, you know, they're slow until they're fast. It's like, how do you go bankrupt? Slowly, and then all of a sudden. Right? Lewis, Shiba to the moon. I don't know, Lewis. I don't know if that's a good bet. I think that's an interesting gamble. Sure, MIT courses we're behind. Oh yeah, that's interesting. They're great. Yeah, it's pretty awesome. I do every single day. I love Zero. I don't like making Zero, but I like learning for Zero. Just think about that. We're getting all of this. We're getting all of this for free, man. It's crazy. LAGO, what's up? Expat Matt, Jedi. Yeah. All right, Jungle, have a good one, man. Be good. Jerry, okay, we're going to get this thing started here. Just say, let me just make sure I acknowledge everyone. How do you understand the system of money globally works? Oh, if you don't understand how the system of globally work, you will always make decisions based on flawed. Yes, it's kind of like, Jerry, you were in construction. You need to kind of know how the foundation of the building is formed before you start building on top of it, or you might make some flawed assumptions and then your whole thing would just come crumbling down. Why is that apropos? Because Jerry's building right now, as a matter of fact. Let's see. Oh, what's up, man? Yeah, Tim Roughgarden is awesome. So Tim Roughgarden is all about the game theory. He's really good. I've listened to a lot of his stuff. He was at Stanford. Now he's at Columbia. But he may be doing, I mean, just look up Tim Roughgarden. I don't think he's at MIT. But he's definitely, he teaches at Columbia. I mean, they all kind of moonlight, don't they? But he was at Stanford for quite a while. Oh, Crypto Gamer, what's up? When is she going to hit again? Probably when they talk about their beauty design. They're doing a clothing fashion design, like a fashion show, and it's all based on SHIB. They partnered up with this designer, and they're doing this big thing. Does it move the price of SHIB? No, because your average SHIB investor doesn't give a crap about fashion, right? You're going to have to look pretty far and wide to find a SHIB holder with a pair of Gucci's. It's just the two different ecosystems. Most of the people in that token are just degenerate gamblers. I mean, super degenerate because they have no idea what they own or don't own, really, if we're being honest. All right. Let's see. Wait patiently, see what Pal's going to say at 11. Well, we know what he's going to say. They have to raise. They have to raise. If they don't, they can't take credit for when these dislocations and all of this systemic gumminess starts to abate. Every time they say this is the worst ever, every time it's different, every time, go back through history, every single time. And then the number comes down and they're like, oh, so the Fed has to get in front of that. The Fed has to raise rates in order to take credit for inflation, which really is just CPI, for CPI coming down, which will come down anyway. So, whatever. Okay. Let's, God, I've waxed philosophic. Okay. Let's do our official opening. We'll come back. Let's look at these markets. Let's talk protocol layers today and see if we are at the end of this sell-off, man. Is the sell-off over? All right. We're back to it. Let me really quick say hello to Sniper Princess, Kingston Dude, what's up, and Valeri. What up, Valeri? Kagula. Okay. What what do you know now that you did not know about crypto starting? Well, that's a huge question. I'll tell you what I know now that the team is the most important part of a project. It's more important than anything. And you see that when you look at the protocols, when you look at the teams behind them, you see kind of behavior that follows those teams. Now, there's no trick to doing well in crypto other than doing your research, buying what you consider are quality projects, and hoping that they deliver. There's no formula to win. There is a formula to lose. If you're chasing price, you're going to lose. If you're chasing idiots, you're going to lose. If the teams are bad, they will eventually steal from you, and you're going to lose. I mean, look at all these people look at all the Tron shills. Those guys are pretty much gone, thankfully. Remember that? We don't even talk about Tron as a protocol layer. Why? Because it's copy and paste protocol layer. It's not real. I mean, there is some real tech there, but it's a hack job. And now the CEO, Justin Sun, one of the biggest degenerates, even more degenerate than Bankman Fried Chicken, is on the run from both the Chinese and the U.S. authorities. We will probably not see him again until he's arrested in one country or another and extradited around like a ping pong ball, because he's a snake and Tron is a fake. So there you go. So, it starts at the team. Find a team that you trust, that you'll invest in. And so that's definitely part of like our kind of 5T strategy. And for those of you that are like, T, what is he talking? Let me see if I can pull that up. I have this little thing called Sketchpad. There we are. Let me make it bigger without getting too big. Let's see. Can you guys see that? Let me take this little cow. There's a little cow here. It's a unicorn. I thought it was a cow. No, it's a unicorn. Okay, so real quick, let's go through this. And then as we start looking at these protocol layers, because I think this is, if you want to reduce your thinking, reduce. Okay? Forget the lottery tickets. Forget the dApps. Stick with stable coins, layer ones, layer twos, and store of value. That's it, period, full stop. You can do really, really good. You can do just fine, just right there. So when we look at our portfolio construction, protocols and layer ones. Okay, what is protocols and layer ones? These are, think of it like iOS. You have your phone and you have the Android operating system, okay? So do you want to buy the dApps, all of the apps, right? In the crypto space, dApps, decentralized applications. Do you want to invest in one of the 100,000 dApps that are all trying to change the world in some very niche way? Or do you want to own the Android operating system? Or do you want to own iOS and make a little bit of money off every single download, off every single transaction? BZ. So that's a rhetorical question. You guys already know this. So own the operating system. Well, the way to do that, it's the same thing. How did the people get rich in early America? The kleptocrats, whatever you want to call them. They own the infrastructure, the roads and the highways. So the way to do that is with these layer ones, which we're going to talk about today mostly. Then you have your store of value, which the only store of value right now, this second in crypto space, is Bitcoin. There is no other store of value, and it's an incredibly volatile store of value, but it's the storiest of value in the space. Why? You would say, well, couldn't stable coins be store of value? No, they can't, because they're pegged to fiat currencies, which can be manipulated and deflated and inflated, and you can have monetary debasement, and all of those effects would directly translate to your stable coins because they're pegged. Unless it's like a stable coin like UST in the Terra system, which is not so much. It's more like a clever Ponzi scheme. That's fine. Okay, so anyway, layer ones, that's what we're going to focus on today. But your store of value tokens like the Bitcoin. And you can monetize those assets either through lending or through options markets. As a seller, not a buyer, as a seller. And Lewis, just real quick, and this is to anyone, if you day trade, you will eventually lose, and you'll lose big, because that's the statistics of day trading. Day traders always lose. The problem, think of it like this. In crypto and in day trading, it's like being a baseball player and you're going to get an at-bat. You say, well, if I'm a baseball player and I'm good, I want more at-bats. Well, not if every other ball pitched at you is a hand grenade. then you have a very high statistical probability of getting blown up. And this is the problem. The crypto space, there are no techniques, not real ones, for trading. Technical analysis does not work. Period. Full stop. All these TA guys, they show up when the markets are going up. They show up and they tell you what to buy. Look at FinTwit. Look at all the idiots on Twitter that come out and make all these stupid predictions, and then the market melts down, and where do they go? They just go away. They're gone. All of them are gone. You see this, right? I can't be the only one that sees this. They just all go away. Since November, the crypto markets have gone down, 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 down. And all of those idiots that were telling you when to buy what, and they're all gone, all of them. Back to their job at Subway or wherever they used to work before they got a year and a half off and collected that couch money that they punted into the market and then became hedge fund managers and TA guys. Now they're all war experts, right? They're all experts on warfare. They were crypto experts. Now they're all experts on warfare for the whole. But so since you know that doesn't work, day trading doesn't work. Now, the way around that would be, okay, look at the options market. If you let's say options, you're like, okay, I like options because it's weekly and all that kind of stuff. Cool. Be an options seller. Sell options against your physical. Okay. Sell options against your Bitcoin. So that's what store value can be up to 25% because you can sell options against your physical. You can sell, 3, 4, 6, 9 months out. You can collect a lot of premium, especially when markets pop up. Like premiums this morning look pretty good compared to yesterday where we were at 38,000. Now we're at 40, almost 41,000. Markets look, better than they were. Those premiums have popped way up, especially the further out in time, because time equals money, right? Time equals money and volatility equals money. Those things cook into a higher premium. And if you're selling premium, if you're selling options against your Bitcoin, you can do okay. Just remember that if you're an option seller, you will eventually get beat on the way up. And if you're an options buyer, you're going to get beat 9 out of 10 times. Sellers win 9 out of 10 times. Buyers lose 9 out of 10 times because that's the statistics. 9 out of 10 options contracts expire worthless. Meaning if you're a buyer and you own those contracts, 90% of the time, they're going to expire worthless. If there was a street by your house and you knew that 9 out of 10 times that you cross that street, you will get hit by a car, would you cross that street? No. No. So I don't know, man. I feel like if people just, math is pretty great. So I feel like you should pay attention to math. Okay. Let's go. Now that we understand, so protocols, store value, what are layer 2, assistance layers? I used to call these 1.5s because they kind of but layer 2 is the correct term. So I will amend. This is like Harmony 1. This is like Matic, things that scale either through opportunistic or ZK rollups and a variety of sharding techniques, and layer 2. So just think of it like this. You have a bank as part of one little bank as part of a banking network. And maybe at that bank, there's tons of transactions coming in and out. They don't need to, in real time, every second, post all those transactions to the corporate, right? Like some little hub of Chase doesn't need to post every 13 milliseconds. What they could do is they could wait, and after a few minutes, they could just post a net, like 10 Bitcoin in, 9 Bitcoin out. Therefore, there's 1 Bitcoin left. We'll post the net to the main bank. This is what these layer 2s do. They handle a lot of transactional traffic in many ways, in a relatively safe, audited way, and then they post reconciliations, bank recs, essentially back to the main chain. And a lot of data, I think we talked about this the other day, there's a lot of data that doesn't need to be on chain, especially when you're getting into the AI space. There's a lot of kind of cross communication between agents on an AI system that may not need to show up in the ledger, especially if they're trying to resolve some kind of calculus conflict or something like that. They're just going and they're trying to resolve something, but they might post the net effect or the lesson learned or some kind of aggregate data. But every little bit doesn't need to be on chain. So a lot of this stuff can happen off chain. That's what Hypercycle is going to do. It's going to leave a lot of the stuff off chain, post the net back to Cardano, to the main chain. So it'll be a hybrid offshoot of Cardano for the Singularity Net community to run this pool of AI agents and let them communicate and do transactions in this kind of weighted label, as far as I understand it, like a weighted labeled hypergraph kind of thing. So it's kind of cool. Yeah. So anyway, protocols. But layer 2s assist that. And so if you have protocol layer investment, you should probably have some layer 2 investment. Stable coins, just keep some, I think you should keep some money in stable coins so that when we have times like this, where you have long, slow melting sell-offs. Remember, we're almost 5 months into this sell-off. So don't just keep 10% in stable coins and then the minute the market goes down, I'm going to buy in. Maybe give it some time. Maybe like break it up into, I don't know, 10 chunks. Let's say you have, $10,000 as that's you have a $100,000 portfolio. You have $10,000 in stable coins. Great. When the market starts to S the bed, maybe assume that you're going to be making 2 purchases a month for the next 5 months, right? What if this thing goes for a year, 2 years, 5 years? Well, that's stupid. But, we're not resolving a bull market or bear market. We're resolving a bunch of bad behavior. And until Eddie, maybe that's our name for every idiot, until every idiot that should not be in the market, that was punting rent checks that they didn't have to pay and punting car payments they didn't have to pay and taking free couch money because they weren't at work that didn't have to pay back, until every one of those idiots is gone, or at least the ones that know how to sell are gone, this market hasn't found a bottom. This has very little to do with macro as far as the Fed funds and all this kind of stuff. This is more a story of the dislocation of pouring a bunch of money into a bunch of idiots that are sitting on couches and wondering what they're going to do while they sit in front of their phone all day long watching TikTok and chicks wearing nothing on Instagram. Every now and then they'll get a wild crypto hair. So this is that, I think. Anyway, that's the breakdown that I use. And then you have the 5 T's, which is the way you analyze me: team, technology, tokenomics, timing, and the problem that they solve. Basically, why token? Can all of this be done with another token? If you ask yourself that, most of these projects, you're like, oh, they don't really need their own token. This could be done already. That's when you start to go, So factor all these things. Okay, let's look at these suckers. Let's look at the markets as they stand right now, and let's focus on protocols. How high can Bitcoin go in a month? Lewis, I think you're asking kind of home run type questions that require a little bit more maybe thought. You could just go back in time and look at what's the highest percentage gain. Matter of fact, Google it. Lewis, Google what is the biggest percentage gain Bitcoin has had in a 30-day period? And I'm sure there's 4,036 arguments to and for that. Okay. The Bitcoin, which is our store of value, is at 4,000. Okay, forget Bitcoin for now, because Bitcoin is not a protocol layer yet. Yeah, they say that we're going to be doing some cool stuff and loop ring and all this kind of, yeah, man, you're going to be able to do smart contracts on Bitcoin. No one, man, people are not doing smart. Most people are not going to be doing smart contracts and launching smart contracts on Bitcoin because it's not there for that. Just wrong thing. Okay. Ethereum. It's the stalwart. It's the highest market cap by a long shot of the protocol layer assets. So go back, you have Ethereum. Who do you have at Ethereum? Well, you have Vitalik Buterin and Joe Lubin and Charles Hoskinson and Dr. Gavin Wood and a couple of other kind of more nominal players. And then there's a big blow up after the DAO hack, and then poof. Why? Well, there was a lot of internal kind of fighting. But essentially you had some Uber nerds mixed with some Uber game theory guys, mixed with some Uber coders, and they didn't quite mesh really well. So Dr. Gavin Wood breaks out. He goes and starts Polkadot, which also got nuked another time for, I think, about 100 to 120 million. I think there was a $90 million loss and then a 32 or $22 million loss. So that's Gavin. And then you had Charles, and Charles went and started, as you know, he started Cardano, and they did some early building, and they said, wait a minute, hold on, stop, let's go rethink this. And so they wanted to have a very principled, theory first, peer review, a very academic progression, the way that a project might emanate in a college university environment among academics and move along with a bunch of peer review. Which, why do these other projects not get peer review? Because they don't want to hear it. It's pretty obvious why some of these projects don't want anyone else really digging into their code too much, because you would get feedback like, this can't scale, and or this is going to shut off, or this is not decentralized at all. Kind of criticisms that we hear on certain projects. So anyway, so there you have it. So you have Ethereum, which is still doing fine. It was where all of the spammy ICOs were created and sold and pump and dumped in 2017. 2018, pretty quiet. Most of the ICOs died, or at least the ICO market died. SEC started coming into the picture, started to get dieted people. Okay. Ethereum written on Solidity. Who created Solidity? Gavin Wood. Gavin Wood goes, but when he creates Polkadot, Solidity base, yes, but you go and look and say, well, what? So then you have Substrate. You start digging in where their innovations made. Yeah, they use part of the consensus mechanism that Cardano created, Ouroboros. So these guys, while they may not all be buddy-buddy, they definitely respect each other, and they are about technology first. I mean, look, even Ethereum is going proof of stake. Polkadot proof of stake. Stupid name, by the way. And terrible marketing followed by no marketing, right? You got a dumb name, at least market it. But no, they named it something stupid, and they did not market it. Why? Those dudes smoke weed and do shrooms and other stuff. I can tell you with good knowledge that the Polkadot team, they get baked. They get baked. I'll leave it at that. So that is probably not what you would see over at Cardano. Polkadot has had a lot of promise. Their idea is that you have a main chain that does not run smart contracts. And then you have all of these parachains up to 100. And that's where smart contracts are run, right? To keep it lean and clean and elegant. Okay. Main chain, parachains. Okay. They call the main chain the relay chain. All right. Now we go to Cardano. Cardano is a little bit different. Cardano really built through this peer review process, and man, they punish their tech and punish it and break it and clean it up. So Haskell based Plutus smart contracts. I think they wanted to find a good balance between the existing financial architecture in the places where they're going to go, which, Africa, Central and South America. Haskell has been around for a while. It's very formal, principled. It's tough to break. It's a good compromise for what they're trying to do. So they build through peer review. They build through letting the kind of academic community, by publishing and having people tear into their work and publishing again. And they really sat down and thought about the way they wanted to launch not only proof of stake, but this consensus mechanism, how they wanted to scale transactions. That's going to be through Hydra. That's later this year, up to, probably several million transactions a second. You'd say, oh yeah, that sounds great. No, that doesn't mean anything. All of these idiot platforms say they can do a gazillion transactions a second. The internet won't allow that. We're on old rails, everyone. And these old rails, these old bones, will only allow a certain amount of transactions per second. So when you hear all of this bullshit, and it is bullshit, coming from Solana or Tron or any of these projects that talk about 150,000 transactions a second, yes, that's when two computers are plugged in next to each other. But when you imply that, when you propagate that out on the limits that the internet has for, how fast things can propagate to a network, how fast transactions can be confirmed, and what that verification process and feedback between nodes, right? T-1 and all this is you kind of extrapolate out. There are just limits. So it doesn't matter if in a cloistered, closed environment with two computers plugged up with a 1-inch wire in a cold room, you can do theoretically all of this stuff. If it doesn't matter if the internet will not support that. The internet will not support a lot of this stuff. You've seen, I go to Mexico, I can't even get freaking Wi-Fi. So it doesn't matter how fast my phone is. It doesn't matter how fast the network is that I'm using. If my goddamn phone can't pick it up, or if my computer can't catch the signal, it doesn't matter. Old rails, right? So, but Cardano has the potential to scale to many millions of transactions a second through Hydra, because each of the way I understand it is that each of the stake pools would be able to process about 1,000 transactions a second on their own. They become these kind of like hubs. Pretty cool. So a lot of this stuff was thought out because of what Cardano is trying to do. Ethereum's goal is just survive, man. Just don't get watered down as these other platforms start to pick up steam. As Ethereum converters, token converters, Solidity code converters become more popular, a lot of the old Ethereum projects that run a lot of transactions, that are transaction heavy, they may want to port away from Ethereum. And Ethereum's like, no, don't, man. Stay with us. Come on. Hold off. Well, Ethereum has a whole bunch of problems that they're trying to fix. You know what? It was the first one. Proof of concept. That's great. But they might not get to that. And even if they do, even if Ethereum does everything it's trying to do, it's going to be just as good as Near is right now. Go look at Near. If you want to look at a project, you want to see what will Ethereum 2 look like? Go look at Near. WebAssembly based, badassness. Cool tech, lean, elegant. Coinbase Ventures, by the way. I was just reading an article about how Coinbase, I think this guy contends, and I agree, that Coinbase is being improperly priced, their stock, because it's not taking into account their venture fund, their venture arm, which probably adds another, $3.5 billion to their total kind of sticker price. Anyway, so, and the point of all of this is you have a little background, but understand that, Ethereum, it was first, it's clunky, it's slow, there's a global state problem. Ethereum has a lot of problems. The fee paradox, the fact that the more people that use Ethereum, the more expensive it gets. The higher the token price goes, the more expensive it gets. So they're trying to alleviate all these things by their transition to what they used to call Ethereum 2.0, which they're now trying to rebrand it. If you rebrand it, what they don't want, I think, is people getting mad that 2.0 is not here. So they'll be like, no, we're not going to 2.0. We're just going to proof of stake. So like, it's still, good old Ethereum is still here. We're just not quite there yet. Okay, cool. They've been saying that for like 5 years. All right. So will they turn to proof of stake? Yeah, at some point, probably. But will a bunch of companies have migrated away? That's the big question. I thought this would be the year for migration away from 2.0. Yeah, 1 is also a good contender, Matt, but 1 is more of an assistance layer. It hasn't quite, I don't think it's kind of put the story out there that it's its own protocol. It's not competing layer 1 really. It's a layer 2 still, I think. Anyway, Ethereum will eventually scale, but are they going to have a mass exodus of projects when it's very easy to port? Well, my contention is that all of these projects are going to all be working together, right? Why would you limit yourself to one protocol or another? You should be able to jump. Your project should be able to jump to whatever protocol most easily facilitates the type of transaction you're trying to process. Companies like banks, they have all sorts of different kinds of transactions. So it would make sense that a bank would not lock themselves into a relationship with one protocol when they could have the best benefits of all of them. There may be, would seem like, benefits to running, Ethereum, maybe your smart contracts or Solidity-based smart contracts, running them across Plutus because of the costs. But there might be times that certain relay chains make sense for certain business transactions across DOT. And you might do some sharding through Matic or One. And you might have some certificate, some transactions that needs the certification process, especially like banks, some certificate. Well, now you're in Algorand. So there's probably reasons why everybody will be not only multi-asset, but multi-smart contract, multi-everything, multi-chain, just to keep clean transactions. By the way, Cosmos, yeah, there's another good one. Rune running on Cosmos could make it happen. But yeah, team is shady. This is my problem, is the Rune team is kind of shady. And it's also not a layer 1 either, Matt. It's kind of nebulous. It's kind of a layer 2, layer 1.5. But so let's get back to our protocol layers. Ethereum, should you own it? Yeah, you need to own some. Cardano, yep. Polkadot, yep. So that's if you believed in Ethereum or believe in Ethereum, then you kind of philosophically should believe in all 3 of those. And if you believe in Ethereum scaling, you believe in Near. Okay? So we already have 1, 2, 3, 4. 4. If you believe in the scaling of Ethereum, you hopefully believe in it, then you believe in Matic, and you believe in 1. Where are we? 1, which is priced to buy. Okay. And then there's Algorand, and Algorand and Cosmos. Cosmos, lean, elegant, fast, efficient, great environment. I love their dApps. I love their little apps. It's hard to find something not to like about Cosmos. It's quickly growing on me. And it just ran right past Polkadot, didn't it? I don't have as well a developed position in Cosmos, but I guarantee you I'm not adding to Polkadot right now, and I am adding to Cosmos. So as we go down the list of protocols, you need some Ethereum exposure, Cardano exposure. Yes, you need some DOT, even though Dr. Gavin Wood is a weed head, and he's baked. Weed would be like the nicest thing those guys do. He's baked all the time, but at some point they're bound to release a project. He's a smart guy. He's not dummy. He's just not always with us. Okay. And then you like Near, you like Matic, but Matic, remember, is layer 2. Okay, Cosmos and Algorand. Algorand is the enterprise play. Algorand it's kind of out-rippling Ripple. And I say this because they seem to have the banking relationships here in the United States that Ripple couldn't quite get. And my guess is that when Mr. Garlinghouse, Bread Garlic Mouth, and Chris approached a lot of these institutions, it was early in crypto and they didn't trust it. And they thought there was something maybe shady about those 2 guys. Now, there's a lot to like at Ripple, the company. Okay. Schwartz is awesome. David, right? The guy's genius. He's drowning at that company, by the way. At some point, he's got to go somewhere where they'll appreciate him, because he's drowning over there and he's not really getting to create. They've created nothing. And so I think Algorand's background's a little different. If you look into Algorand, a lot of the core kind of ideology and philosophy at Algorand was pre-crypto, because Silvio was writing documentation and coming up with math proofs and things like this. You can go much deeper into it, 10, 12 years before crypto. So matter of fact, there's a reasonable speculation that lots of the early days Bitcoin kind of thought came directly from stuff that Silvio, engineered, wrote, created, theorized. Algorand is the best invisible project. It's not sexy. No one talks about it. They do have a lot of enterprise connections. Algorand, I feel like it will perform very well. It just hasn't, because nobody cares. Nobody cares. Nobody cares. But you need it in your portfolio. So if you want to have sufficient exposure, protocol layer exposure, Ethereum, Cardano, Polkadot, Cosmos, Near, Algorand. Okay. Could you say Avalanche? Avalanche is a maybe. I feel like it's always the second tier of those protocol layers. Do you want Solana? Not right now. Bad team, a lot of thievery. It's VC pump and dump coin. So I would just be very careful. And listen, there's a lot of other projects, protocols that are going to pop up, and they're going to be like, we're here, man, to do stuff, man. Go to your 5Ts. Okay. Go to your 5Ts. Don't skip past it. And again, one more time, team, technology, tokenomics, timing, right? Did they miss it? And the problem that they solve. And that's what we call the why token. Why token? Does what they solve need this token, or could something that already exists? For instance, is this really just a piece of software and they threw on a token? This is the way I look at Brave. Do you really need the Brave token? I don't think that you do. I don't think that it's integral to selling ads. We have currency units. Okay, so, well, I want to sell ads, and you can use buy the Brave token. Okay, but there's never been advertisements sold. That's never existed until Brave token. Wait, what's Google then? And Yahoo, and all that. They never sold ads. I don't understand. So make sure you why token these things, and you can find a reason why another token might not suffice. You'll start to see how quickly these things dwindle. And this is why when you ask, the problem they solve, the why token, in many cases, unless it's a protocol, there is no answer for that. But look, you're a developer, you make something, you want your own token because you want to get rich and get out. It's going to get harder and harder to get rich and get out. It's going to be the whole beauty show thing. You're going to see VCs secretly getting behind a project and pumping it. Unrelated, it looks like a MetaMask token is coming. They've said, we're not going to make it a cash grab, which means it's probably not going to be anything great, unfortunately. But MetaMask is awesome, and they make bank. And everybody, I use it. It's very easy to use. It's become, especially if you mess with NFTs, it's become kind of a fixture as far as the wallet you would use. And anyway, so a token is coming, a DAO is coming as well. And the DAO won't, it won't redistribute funds that MetaMask is making, but their idea is that the DAO would dictate future iterative software upgrades, which means it's not a DAO, because the first letter in DAO stands for decentralized, second, autonomous organization. So this DAO is not that. It's not really decentralized, and it's not really autonomous if it's being run by, the people at MetaMask. But it's an organization. So it is an organization. So anyway, a MetaMask token is coming, and a DAO is token. A DAO is coming, and I guess the token would be used for voting and all sorts of stuff. It'll probably have very little monetary value. So don't get your hopes up for a nice little exit. Apparently, the people at MetaMask will not be thanking us for our participation. All right. That being said, look, Bitcoin's starting to sell back off. In answer to the question I asked as far as the show, which is green markets, is the 5-month sell-off finally over? No. I don't think the sell-off is over. I don't think we're out of the woods yet. I think there's more pain until every last idiot is out of this market. And there's still some idiots in this market. So it is what it is. Just make sure you're not the idiot. You know how you do that? Just always second guess yourself. Always check your theories, learn your fundamentals, read, absorb, your mental inputs. They directly dictate your output, right? If you're absorbing junk, your output is most likely junk. If you're absorbing information and theory and fundamental principles, then your outputs are going to be clean and elegant and less biased cognitively, philosophically, and otherwise. So just, man, make smarter decisions, man. Let's see. Your order said, oh, I don't participate in governance, Mike, not yet. I don't have a big enough bag. My Algorand pile is pretty small. It's pretty small. And that's because they don't feel like they need to market to the people. And so if you feel like you're better than the rest of us, you don't need to communicate to the people that are supporting your vision, then I don't feel like I need to give you money to support your vision. Right? Think about the people that do communicate. Vitalik, a little bit. Charles Hoskinson, a lot. Gavin, never. So how do I invest? Well, Ethereum, a little bit. Cardano, a lot. DOT, no more. I'm not putting $1 extra into Polkadot other than the staking is really good. So technically, I'm adding 12% to my position every year. But that's kind of a indirect way to say that I'm dollar cost averaging in. But technically, I guess I am. Let's see. How my ADA set 55 may go lower than that if trend continues accumulation time. Yeah. All these projects are going to get punished until they deliver. If you don't deliver, you get punished, and that's that. All right, everyone, be good, stay out of trouble. So as you know, we're taking the money map shows, and the minute we get done with the show, we download it, we flip it, and I create a show about an hour later. So about an hour after they happen live, we'll bring those shows over onto the channel so that you guys can check them out. Cool? All right. That being said, stay out of trouble. Stay in school. Don't do anything my poor, insolvent, drunk, strung out on meth grandmother wouldn't do. And as you guys know, that's very little. And we will see you on the next one.